Welcome back. You're watching Big Deal, and Neeraj Bharadwaj of Carlyle is right here with us. So, Neeraj, we were talking about the valuations in the market. They just exited one financial services company in which you held a substantial stake. Now, but that does not mean that you're exiting from financial services. Your interests really lie there. You are, as we understand, looking at probably a few other assets in the same category. So what do you think about the valuations in this sector, and why are you bullish in this particular space, and which pockets?
Sure. So as I said earlier, we tend to have a sector-driven approach and a thematic approach to how we invest. But I think the main criteria we look at is, are we backing a great promoter and great management team? Because that is fundamentally our business. We are not day-to-day operators of a business. We want to back great management teams who can actually operate great businesses. So with that, in that context, what are sectors we like? So you mentioned financial services. If you believe that nominal GDP growth in India is 10, 11, 12%, retail credit is generally a multiplier of that. In the last 2 years, retail credit has actually grown at 17%. And that gives a tremendous amount of opportunity to back companies who require capital for growth. And so that is an investment thesis for us, backing great management teams in this sector who have a strong credit culture. I think secondly, if you look at another sector which we're very bullish on, is healthcare services. India's per capita healthcare spend is 1/10 of global averages. Pathology spend is 1/200th of the US. And unfortunately, we as Indians are actually susceptible to all sorts of lifestyle diseases. So 60% of cardiac arrests actually happen in India. 50% of the world's I don't mean to depress you.
You're taking advantage of that situation. Don't make it sound like that.
50% of the diabetic population actually lives, of the world diabetic population lives in India, right? And so there's this huge demand-supply gap. So that makes, and people trust brands in this country. There's a very large unorganized sector which will ultimately transition to organized. So that is the thesis behind healthcare services, which is also domestic consumption driven.
But talking about healthcare and overall pharma sector, how bullish are you on this particular sector? Because that's not the flavor of the season. That has been the darling of private equity for too long. But now with US FDA concerns and other things cropping up, is it equally attractive?
See, so if you take the healthcare space, right, I would segment it into maybe 3 subsectors, right? So healthcare services is what we talked about earlier. Then you have pharma. And then you have medical devices, right? The medical devices sector is still small in India, doesn't really lend itself to the kind of deal sizes we're looking at. I think within pharma, if you further sub-segmented, you're looking at domestic pharma and the sector you're talking about, generic exports. I think the export market has become tougher, right? With US FDA, with President Trump talking about protectionism and a global tax. So it has become tougher. But having said that, and this is true for IT as well, which we'll talk about later, these are massive sectors in the country. So they might not deliver the growth rates which they had earlier, but they will still deliver a healthy growth rate, and they have the most mature business models, the best management teams, and the opportunity to actually acquire abroad. And so we are still very bullish on that segment. But you have to take a realistic perspective of what from here out for the next 5 years, how this might play out versus the prior 5 years. It is not going to be more of the same.
So from what you say, I assume that you are still bullish on IT even at these levels, with protectionism being one of the prime concerns for the sector.
I'm very bullish on IT, and the reason, like I said, first you have to take into account the fact that the next 5 years will be different. It is tougher today, right? And I think you will find companies having to do more local hiring in the US, and therefore margins will come down a bit. But you look at the disruption which is happening. Everything is going digital. As companies had to retool for Y2K, they will have to retool for digital. That's a positive. On the negative side, you have local hiring, which will potentially drive down margins. You have more automation coming in, which will take away jobs. You have the cloud, applications moving to the cloud, which are not as complicated as they are if you had ERP in your back end, right? So those are some of the disruptions which are happening in the market. But it's a $120 billion market growing at 10% dollar growth. There will be opportunities.
All right. So opportunities, you're looking at IT, healthcare, and financial services is another area that you are keen on at this point. What do you have to say about the e-commerce space, Neeraj? Of course, you have an investment in delivery, the most recent investment you made, but that's more of a peripheral infrastructure to e-commerce. Is it a more cautious approach to this sector?
So we're very bullish on the e-commerce sector. So just to give you some rough numbers, The e-commerce market in India is about 12-13 billion from a GMV perspective. China's at 700 billion. So we're 1/50th to 1/60th the size of China. And I'm not saying everything is comparable, but to give you a sense of how large this market could become. The market in India has grown about 13x in the last 5 years. And we believe that opportunity for growth, the penetration rates are still very low. And so this will continue to grow moving forward. The business models in e-commerce are being formulated as we speak. And so, as you rightly pointed out, one other way to play the sector is to look at enablers, whether it is payments, whether it is logistics, whether it is packaging, as examples. So we have decided to play the logistics space, and not just play the space. We found a great company, and I can talk more about it. But with delivery, where you're providing, e-commerce logistics is smaller parcel sizes. It has cash and delivery. You need to meet tight timelines. You need to provide traceability of applications. This is not what traditional logistics companies do. So it requires a new breed of logistics companies, and we believe delivery is a leader in that space.
All right. This consolidation is working in favor of the industry, the kind of consolidation that we are seeing in the e-commerce and the payment system.
See, it's hard to talk about consolidation specifically, but I think the market will benefit in general if there are more viable business models. Right? You can only fund losses to a certain degree to get customer adoption. At some point, you need to have a standalone business model with repeat transacting customers, which needs to be viable. And so if the industry is transitioning to that perspective, I think it's positive.
All right. And talking about manufacturing and other capital-intensive sectors, you're not averse to that particular space. Are you looking at investments in some of those when it comes to industrials or manufacturing?
So it's actually a sector we like a lot because, because they're capital intensive, there's also a need for capital. And so it's a sector we actually, if you look at globally, we've done a lot in. I think in India, at least for the last few years, capital intensive businesses have had low capacity utilization just because the end demand hasn't been there. And so people have not necessarily felt the need to deploy new capex on the ground. I think that will change over the next few years, and as that changes, we will begin to look at it more aggressively on the industrial side. In terms of manufacturing, I think we have looked at specific niches, for example, auto parts, where there's a very strong technical component skill set which comes into play. But then you also have to find businesses where you are competitive on a global scale, right? And Indian manufacturing, at least to date, hasn't delivered that. But hopefully with the Make in India campaign, that will change.
Any other sectors that you are looking interested in and you won't mind betting your money there?
See, I think we've covered a lot of it. It tends to be in those two buckets. One is domestic consumption, where we believe that India has low penetration regardless of which sector you look at. We talked about financial services where, households invest 8% of their assets in equities. The US does 42%. Just to give you an example, we talked about healthcare, right? So I think there's a domestic consumption theme driven by increasing per capita income and low penetration rates. And that will be financial services, healthcare, consumer businesses. Logistics will be an enabler of that. And then the second theme will be export-oriented businesses with a different focus, but there you're either funding acquisitions, international expansion. I think the first case in domestic consumption, you're providing growth capital for growth.
All right, but you are not like some of the other funds really focused on stressed assets because they will provide maximum buyout opportunities hopefully going forward.
So we have different pockets. Right now we're very focused on private equity in the country, but on a global basis we look at distressed, we look at real estate, and as the Indian opportunity develops and matures, we will participate in those sectors as well.
So globally, Carlyle has got these platforms. So are we looking at any of those really entering India as and when the opportunities really develop? Because our InvITs are coming in online, our REITs may get listed as well in some time. So real estate opportunities are coming in, and on the other hand, stressed assets opportunities as well.
So definitely, I think as the market matures and as there's depth to the market, I think depth is equally important. We will definitely look at it because we have these asset categories globally as well.
All right. Stay on with us, Neeraj Bharadwaj. We'll take a short break but come back with more investment ideas coming in from Carlyle and what it intends to do over the next 1 year.